Hello everyone, I'm Joel, your host for Talking Trends, where we explore real estate trends and provide luxury lifestyle updates for the greater Sarasota area. Today we're taking a look at the first quarter 2026 results compared to the first quarter of 2025. As always, I've broken Sarasota County's luxury market into single-family homes and condominiums, and then further into price points. 1 to 2 million, 2 to 4 million, over 4 million, and then the ultra luxury properties over 10 million. Today we are filming from Golden Gate Point, one of Sarasota's most walkable and desirable waterfront enclaves. We currently have several opportunities here, including 2 listings at Harbor House West. Right now we are inside Residence 12, offered at $1,329,000, set within that highly active $1 to $2 million price segment. From a high level, the start of 2026 continues to show a more segmented market. While certain price points remain highly active, particularly in the lower price luxury tiers, inventory levels and buyer selectivity are shaping the upper end of the market. So let's start off with single family homes. In the $1 to $2 million price range, the number of sales increased about 3% year over year. At the same time, active listings declined more than 15%, causing months of supply to drop approximately 18% to 5.3 months. Average pricing increased slightly, reinforcing the continued strength in this segment. Moving into the 2 to 4 million segment, sales were relatively flat, down just over 1%, while inventory increased slightly by 3%. Months of supply rose approximately 4% to just over 10 months, and average prices declined around 3%. Overall, this remains a stable, balanced segment. In the over 4 million single-family home market, sales increased about 22% year over year. Inventory also rose approximately 17%, while months of supply declined slightly by almost 4%. Average pricing increased modestly by about 1.5%. This market segment has gained significant momentum. At the ultra luxury level, over 10 million, sales remain unchanged year over year. Inventory increased significantly, up by about 75%, causing months of supply to rise by approximately the same percentage, now exceeding 120 months of inventory. Pricing will obviously be dynamic in this segment. Turning to condominiums, the $1 to $2 million condo market saw strong activity. Sales increased nearly 78%, while inventory rose modestly by about 4%. Months of supply declined significantly, down approximately 41%, and average pricing increased just slightly. A solid performance for this price point. This is exactly where locations like Golden Gate Point continue to stand out, offering walkability, waterfront views, and proximity to downtown, while still sitting within one of the most active price points in the market. In the 2 to 4 million condo segment, sales declined slightly by about 4%, while inventory increased almost 10%. Months of supply rose approximately 14%, and average prices declined about 5%. The over $4 million condo category showed a more notable shift. Sales declined approximately 42% year over year, while inventory decreased by about 13%. However, months of supply increased significantly, up roughly 49%, and average sold prices declined about 9%, reflecting longer timelines and greater buyer selectivity. And finally, condos over 10 million saw no closed sales in the first quarter of 2026 compared to 1 sale the year prior. Inventory declined slightly, and months of supply currently sits around 18 months. So what does all this mean? The story of early 2026 is segmentation. The $1 to $2 million market continues to show strong demand and tightening inventory. The mid-luxury tiers remain stable, and the upper tiers are experiencing longer timelines with more discretionary buyers. Overall, average pricing has remained steady with modest movement depending on the price point and property type. Looking ahead through 2026, key factors will continue to include inventory levels, buyer confidence, broader economic conditions, and of course, the war. What we are seeing early in the year is continued engagement from buyers, particularly as more options become available. For buyers, opportunities exist across multiple price points, especially as you move higher in the market. But note that inventory is generally stabilized and in some segments decreased. We do not see a large number of new listings coming on the market, a sign that now may be the best time to buy. Time may no longer be favoring the buyer. Also, these stats are through March, but our specific business has seen very sharp engagement in April, including multiple contracts at all price points. This, again, may be a sign of changing times. For sellers, success will depend on strategic pricing, strong presentation, and high-quality marketing. And as always, remember, while we review county-wide trends, real estate is hyper-local. Your neighborhood, your building, even your specific street may behave very differently. That's why having an experienced, market-savvy advisor matters more than ever. Because in today's market, trust is the difference. Thank you for joining us today on Talking Trends. We look forward to seeing you on our next segment.